Let's start off with this local currency. We're sitting at around 706 to the greenback. In fact, we're starting to see broad-based dollar strength coming to the fore today. The rand has been under pressure since the beginning of last week.
Hi, Eleni. Yeah, quite frankly, this morning has been rather quiet. Not a lot going on as markets tried to digest last week's heavy movements in both the rand and the likes of the euro and gold. Big movements, a lot of volatility taking place last week. There's a lot of focus on Europe as to the authorities' reaction to the emergency fund, and in fact they've said that they're not going to increase the size of that fund. However, Europe seems to be performing pretty well, and last week's German data came out very supportive for the euro as well. Turning attention to the rand, we've had some serious weakness creep in last week. Correction on the back of bond sales, on continued central bank reserve accumulation, and really just a lack of supply feeding through into a very, very skittish and nervous market. And we did see the rand as weak as about around 712, 713 on Friday.
David, I mean, just touching on some of that European news that we have been seeing, of course, Spanish banks once again under the spotlight. What is driving the FTSE 100 lower in today's session as well as the banks? They're worried about renewed capitalization issues and requirements coming to the fore. But when you see that Germany came out with interesting IFO data, in fact, business sentiment rising to the highest level in 20 years on the back of the manufacturing sector as well, and the fact that it has fully recovered, how's that then set to change the euro-dollar play going forward, given the fact that the euro rose to its highest level in more than 2 months in early trade?
Well, the real macro picture, Eleni, is that Europe as a whole, or the European system as a whole, or the countries that make up the euro, their debt woes are in fact better than America's when you look at the US budget deficit and the financing needs that are required there. The fact is that America is fast approaching their debt ceiling of somewhere around $14.3 trillion. I suspect that Congress will simply pass a new ordinance that will allow them to raise that debt ceiling. But America has got some serious debt problems as well. The problem for the euro arises when focus moves onto a specific country within that European mechanism, like Ireland, like Spain, like Italy, like Portugal and Greece, and others for that matter. Then people get nervous about the future of the euro and the political implications for a possible breakup of the European mechanism. So that's the kind of dynamics playing themselves out at the moment. On a macro basis, Europe looking slightly better than the US, both from an economic growth point of view, from a financing point of view, and that's why we've seen the euro react the way that it has. But the peripheral debt problems are not going to go away in a hurry.
It was quite interesting, David. I mean, as you mentioned, a lot of volatility coming to the fore, and I mentioned that the euro did relatively well this morning, and that seems to be reversed. We saw that the most recent currency futures showing perhaps movement away from the US dollar and towards the euro. That has been reversed, it seems, because the dollar is up around 0.5% against the euro.
Well, I think what we saw last week is an unwinding of a lot of short euro positions on the back of the European woes. As these issues became evident, people unwound those European positions. And what we've seen this morning is a reaction to the fact that the authorities are not going to raise the size of the emergency fund, and a lot of focus on Ireland and the problems that the government is facing there, and no longer having the support that they need to run a majority government. Spain, as you mentioned, enjoying some of its some negativity in the spotlight. So those things have kind of taken some of the shine of the euro, but it's not unsurprising that the euro has come off a little bit, 0.5%, given the fact that it ran up almost 6 or 7 big figures in the last couple of weeks.
David, also just focusing on the fact that central banks under the spotlight. We've got the meeting with the Bank of Japan also coming to the fore, other central banks like Malaysia and of course India also making their interest rate decisions. And it's quite interesting that Turkey last week in fact cut interest rates, and it seems to be focusing on the strengthening in the currency and perhaps using the interest rate as a mechanism to try and weaken the currency. And of course various central banks have been using various methods to try and assist the currency in weakening. We heard that the Reserve Bank is going to be accumulating reserves in South Africa. Looking at what other central banks are doing, how do you expect this to perhaps change the rhetoric of South Africa's central bank, if at all?
Well, they do have a number of options. They're using one of them at the moment to increase their reserve accumulation and buy more dollars out of the market. And that's one of the reasons that we have seen the rand weaken the way that it has. We are coming up to a budget time in South Africa, and I guess as you know, the possibility exists that we announce some kind of reserve holdings or tax on foreign flows into and out of South Africa. They could utilize that kind, a Brazilian kind of situation to try to weaken the currency. The stated aim, of course, is to weaken the currency to make it more competitive. We're not alone in that situation. Turkey, as you mentioned, they dropped interest rates last week, and they're also using some kind of financial implications for inflows into Turkey to try to stop the hot money as such and to weaken the lira. And of course, it's all about exports and creating jobs. Essentially, most of the countries in the world are in the same boat, all predicated, of course, by China and arguably their artificially weak yuan, and which is giving them a competitive edge. And everybody's grappling with these problems as Europe and the US also try to inflate their way out of the debt burden.
And at the same time, we're seeing food inflation increasingly becoming a problem, David. But let's just focus on the local currency going forward. You mentioned around 713. How much of a risk is it that we could head into 720 territory, 730 going forward over the next couple of weeks or so?
Eleni, I don't think that's beyond the capacity for the rand's movement at this point in time. I think the rand will remain on the back foot. We are beginning to see some supply coming in from exporters, which of course is helping to satisfy the shortage in the market. But for the foreseeable future, I think the rand is going to be on a weakening bias, with sort of just below the 7 area acting as a support now for dollar rand. I think if we get the technical level on the upside is 717 at the moment. That's quite a key level, dating back quite far from when the rand was in a bull trend. And I think we'll remain in that range, but I wouldn't be surprised to see us attack that upper end of the band and perhaps move as high as 720 or 730 in the coming weeks.
David, you mentioned that exporters are starting to come to the fore now, and keeping in mind that January usually is a very strong import month. Also, another trend that we've seen since the beginning of November, perhaps foreigners selling out of South Africa's bond market and very strong outflows since the beginning of this year. Do you expect this trend to continue?
Yeah, I think to a large extent a lot of that outflow will have taken place already, but you know, one has to ask the question, what's going to entice the money back into the bond market, given the fact that arguably we're at the end of the rate cycle, and you know, that the repo rate is going to remain flat for at least 6 to 9 months, and then the next move is possibly a move higher, all things being equal. So it's hard to see where the money is going to come from. Equity markets arguably overvalued, so investors taking a backseat at the moment, taking some of their profits off the table, taking some money out of South Africa, and I guess just assessing the global situation for the impact that we might see on global bond yields and the impact that will have for domestic flow. And right now, you know, there's not a lot of reason to get terribly bullish about the rand, as investors are taking a backseat at this point.